Welcome to the Commercial Real Estate Insights Podcast. I'm Steve Hamoen, and it's 9 a.m. on Monday, March 24th. Today, we're diving into some exciting developments in the real estate world. Boxabl's prefab tiny homes are in the spotlight. The urgency for fast housing solutions in California's wildfire zones is increasing, and Ontario's zoning policies are quietly shifting to support smaller, denser builds. Plus, we'll discuss why tiny homes might be the biggest commercial real estate opportunity that no one's seriously watching yet. Let's kick things off with the latest market news. Boxabl's share offering is now live. For those of you following the prefab housing space, Boxabl might already be on your radar. This Nevada-based company is renowned for its casita, a 361 square foot foldable home that ships flat and can be set up in under a day. It comes complete with a full kitchen, full bath, and high ceilings. The beauty of it? You can drop it into your backyard, a rural lot, or an infill project with minimal site work required. Now, Boxabl is raising money publicly, with shares priced at $0.80. Investor interest has already surpassed the $10 million mark. Why is this significant? Because Boxabl isn't just selling homes. They're creating a housing delivery system that could drastically reduce build timelines. In an environment where labor is scarce and traditional builds are facing backlogs, this kind of disruption is monumental. It has major implications for commercial investors, REITs, municipalities, and developers who are seeking fast, code-compliant housing at scale. Shifting focus to the broader movement behind tiny homes, let's talk about why California is ground zero. Wildfires have ravaged thousands of homes over recent years. In places like Paradise and Maui, entire communities have been wiped out, and the rebuilding process has been excruciatingly slow. Enter the tiny home. Local governments in California are now fast-tracking zoning and permitting for small-footprint modular homes to quickly provide shelter for displaced families. Some counties are even permitting the temporary use of tiny homes on lots where primary structures were lost, aiming to jumpstart community stabilization. From a commercial real estate perspective, this is noteworthy because public sentiment is shifting. The stigma around small homes is diminishing. In urgent situations, speed trumps square footage. If Boxabl or any tiny home producer can prove its value in fire zones, this model could proliferate. Now let's bring the discussion to Ontario. While we aren't dealing with wildfires, we are facing a crisis of affordability, availability, and land constraints. The government is aware of this, which is why we're observing increased interest in upzoning across the province, particularly in cities like Toronto, Hamilton, and even mid-sized markets like Kitchener and London. Accessory dwelling units are now permitted by right in many neighborhoods. Fourplexes can be built without needing variances. With CMHC's Housing Design Catalog offering downloadable, pre-approved blueprints for small-scale multifamily units, you can pair these with Boxabl-style solutions and transition from permit to keys in a fraction of the time. For commercial developers and small infill players, this presents a unique opportunity. Imagine owning a corner lot or an aging triplex in Waterloo. Previously, a teardown and rebuild would entail 6 months of planning, rezoning, architecture, and headaches. Now you could install a modern modular fourplex that's pre-approved and cost-efficient within weeks. This isn't just a construction shortcut, it's a portfolio accelerator. The final point I want to make is psychological, the mindset shift. Tiny homes used to be seen as a novelty, an off-grid, minimalist fantasy. Not anymore. They're becoming the go-to solution for speed, affordability, and density. They're being used to rehouse wildfire victims, deployed by municipalities for transitional housing, and appearing in Ontario as laneway suites, backyard rentals, and cottage replacements. With rising rents, tightening capital markets, and zoning support shifting in our favor, the timing is right. From a commercial real estate investor's perspective, this is about more than just housing. It's about controlling the entire supply chain, from design and delivery to financing and cash flow. Prefab tiny homes, especially ones like Boxabl's Casita, could become the new blueprint for small-scale residential development, rental portfolios, and community regeneration. So here's the takeaway. Boxabl is raising money, California is rebuilding fast, Ontario's zoning is evolving, and the concept of a 361 square foot home delivered in a box is no longer fringe. It's becoming policy, it's becoming mainstream, and if you're in commercial real estate, this is the next space to watch. As a full disclosure, I did, for giggles, buy a small amount of Boxabl shares, not as investment advice, but because I believe this is a market ready to explode. So, stay tuned for more updates. Welcome to the Commercial Real Estate Insights Podcast. I'm Steve Hamoen, and it is 9 a.m. on Sunday, March 23rd. Here's what we're covering today. Ontario homebuilders stall, the CMHC fast-tracks investor-friendly housing designs, and interest rates might be heading lower, faster than you think. And in other news, why the City of Toronto quietly made moves to cut red tape for modular housing. First, let's talk about what just happened in Ontario's pre-construction market. In Elmira, a new 55-home subdivision just launched, and only 6 homes sold. The rest? Sitting idle. This isn't just one quiet corner of the province. Builders across Ontario are pulling back. New home starts have plummeted. No shovels. No framing. Just silence. Why? The math doesn't work. With pre-sales this low, projects can't get financed. It's simple. No buyer confidence, no build. Developers can't carry million-dollar dirt without momentum, and momentum has vanished. The cost of land, red tape, and delays are eating into already thin margins. If you're in CRE, pay attention. This could mean a serious shortage of small-scale housing supply in 2026 and 2027. As immigration continues to push demand higher, we may see intense upward pressure on rents and values, just when today's delayed projects were supposed to be delivered. That's the early signal smart investors watch for. This isn't a moment to sit idle. It's time to position. Next up, the CMHC just handed small investors a cheat code, and barely anyone's talking about it. Canada's housing design catalog is here, and it's a game changer. If you've ever tried to get a permit for a triplex, a fourplex, or even an accessory unit, you know the pain. But now, you can choose from a set of pre-approved designs. I'm talking about architectural packages that are province-specific, zoning-friendly, and, once confirmed locally, ready for fast-track approval. Ontario investors now have access to multiple designs, including fourplexes and sixplexes, with accessibility options and unit breakdowns all preloaded. You download the package, bring it to your city, and, assuming your lot is zoned right, you're basically jumping the permit line. This cuts weeks, sometimes months, off the design and approval process. And it reduces your soft costs dramatically, especially if you're building for long-term rental or multi-generational housing. If you're an infill builder or small-scale developer, this is the government giving you the green light. Use it before everyone else catches on. Now, let's get into interest rates, because this one's heating up fast. After a surprise cut earlier this month, momentum is building for 2 more rate drops by summer. Major economists now expect the Bank of Canada to bring its overnight rate to 2.25% by June. That would be a full 50 basis points lower than today. Here's what that means in real terms. If you're on a variable mortgage or a floating rate credit facility, your borrowing cost could drop significantly, quickly. That also means your debt servicing improves, your cap rates look better, and those tight deals from last year suddenly pencil out again. We're already seeing the effects. Real estate brokerages and mortgage offices are reporting a spike in activity. People who were sidelined are coming back with fresh approvals. February numbers showed a 27% drop in sales year over year, but March is looking stronger already. That's a lagging indicator catching up to live sentiment. Listings are up, days on market are stretching, but buyer interest is heating up behind the scenes. The takeaway? Don't wait until everyone's chasing. If you're thinking about repositioning a property, refinancing, or acquiring your next buildable lot, now's your window. And in other news, Toronto just made a big move to streamline modular construction. The city has updated its certified plans program to fast-track modular and prefab housing approvals. This means developers using CSA-certified modular systems no longer need full-scale factory inspections. Instead, city inspectors can approve builds on site, speeding up timelines and slashing red tape. Combine this with the CMHC catalog, and we're looking at a future where you can spec, permit, and build a fourplex in record time, without the headaches we've dealt with for years. Toronto's also exploring ways to incorporate the CMHC-approved blueprints directly into its modular programs. That alignment would create a path for faster approvals and potentially lower carrying costs for developers who build in this space. So, if you're not thinking modular yet, it's time to start, especially for infill, laneway, and underused lots. Final thoughts. This week gave us clear signals. Builders are retreating. Interest rates are likely falling. And the government, yes, surprisingly, is giving investors tools to build faster, smarter, and cheaper. If you've been waiting for the market to shift, it just did. Quietly. Now it's on you to move. That's all for now. Stay tuned for more insights on the Commercial Real Estate Insights podcast. I'm Steve Hamoen. Until next time.